Now, my next guest says, though, he owns far fewer of these Mag 7 names than he's had before, and he's focused on the 493. So let's bring in now Landsberg, Bennett, Private Wealth Management, their CIO, Michael Landsberg. So we're getting cheaper, but you're still saying, okay, you know what? It's time to look around, and particularly at these 493.
Charles, most everybody has all the 7, and they have probably too much of them. The indices are loaded up with them. We still have 6 of the 7. We just have a much lower weighting. We have a half weighting. But the 493, to me, those are the opportunities. They're underowned, underloved. And when I look at what's happened with the other 7, they used to grow at 3 times the rate. Now it's 2 times. It'll be 1 time. So you look at it and say that opportunities are probably somewhere else.
I'm going to drill down on opportunities, but let's do big picture for a moment. The big question is inflation. We obviously, the inflation, the signals are moving higher. We'll see just how much more they go. But are we at a point now where it starts to have a material impact on certainly the Fed decisions, but the stock market?
I think it does. I think what's happened is the market, I think, is underestimated. We expected us to be at 3.25, 3.5 by year end. We're going to be over 3.25, we think, this Friday. And we've got nearly a 3.7 for the next month, because obviously the war and energy has gone up a lot. That's affecting it. And that's really offset anything else. If it goes longer, that's going to be a problem. I think companies have done a really good job, like they did during the tariffs, being able to manage some of those things on a shorter term basis. I don't know if they can manage oil if it continues higher, stays higher for 6 months.
Right. Well, let's hope that doesn't happen. One thing that is happening, though, on the other side of the equation, our earnings estimates are really starting to fly. This is just February 27th. We're at 14.7%. April 2nd, 17.4%. Earnings estimates are going higher. They say earnings are the mother's milk of rally. How much of a positive impact could this offset, in terms of the broad market?
Absolutely. I mean, if you remember a year ago, everybody cut their estimates to nothing when the tantrum happened, and then they played catch up the whole year. I think they're playing a little bit of catch up now. We think this is going to be a real strong quarter. I think what's going to happen, unfortunately, is the CEOs are going to give you no real visibility, because they're going to be able to use this idea of the oil prices and the war to be able to tell you no. This is a 6th quarter in a row of double-digit earnings growth.
That's sort of unheard of. That's unheard of.
Absolutely.
It's
and you have more risk not being in the market than being in it.
I was going to say, you don't bet, you don't try to guess when something like that ends. You ride that wave.
Yeah. As much as you can. I mean, I'm suggesting to people, you're driving on a windy road, it's a little foggy. Maybe you take off your foot off the gas a little bit because we don't know. But you're not pulling over to the side of the road like many people did last year because the market passed them by.
So one thing you're saying, okay, everyone, to your point, I don't care what you own Mag 7. You've got exposure to it. So time to look to be overweight in different areas. You like energy, commodities, ex-gold, low beta, mid-caps, international. So someone watching, I was talking to someone the other day about commodities, ex-gold. How do they get exposure to that?
There's quite a few ETFs you can buy. They're actually even 1099 ETFs. You're not getting that nasty K1. You could buy some of the ETFs that are out there that are broad-based commodities to give you exposure to everything. And that way you're not in the futures markets and doing that stuff. It's a lot easier to buy alternatives now than it was a few years ago.
I want to get to some stock picks here. Ulta, here's what interesting. Ulta had a major gap higher here. Had a major gap higher here. And then more recently, a gap down here. Are you worried about the consistency or inconsistency here?
I think what's happened is they've got a new CEO, and she's really, I think, an operator, not a marketer. I think the last guy was a little bit more of a marketer. They lost a little bit of their luster to Sephora. She knows what she's doing. They've got 25 million people as loyalty members. That's 1 of every 5 women over the age of 14. They're going to be in good shape, and I think they're the ones to beat in the space.
I mean, just anecdotally, the first time I went to saw one, it was about 20 years ago at a strip mall. I lost my mind. I went straight home, researched the company, and bought the stock. Did pretty good. You like natural gas here, Antero.
Antero, a little bit different than the previous guest, like Kinder Morgan. I like this one primarily because of its location. It's in the Appalachian, right around Virginia. That is kind of grand. It's going to be a data center alley. So you're getting a large player in the natural gas space, low beta name, but you're really getting exposure to data centers.
Coca-Cola, Euro Pacific. It sounds like the most boring stock in the world, but it had a hell of a spike here, so much so that it was extremely overbought. It's pulled back, and you think this is a good entry point.
Yeah, I like it here. I mean, we've owned it for a while, but I also like it when it's pulled back. It's down 25% off the high. It's a very stable, again, low beta name. I think you want to own low beta here than try to buy the same stuff that's got the higher betas. Go to some lower beta names, diversify your portfolio. This gives you exposure, more bottlers than anybody else in the world. They're the largest bottler in the world.
Wow, great stuff. Michael,
That's good.
It's good to hear different perspectives from time to time. Appreciate it. All right.